we may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country. Not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that.
On January 27th, after Chinese startup DeepSeek revealed a cost-effective artificial intelligence (AI) model, a new wave of questions surfaced, causing Nvidia's stock to plummet 17% in a single session. Investors were alarmed by DeepSeek's assertion that it trained its R1 model for a mere $6 million and made it competitive enough to outperform OpenAI's more costly O1 reasoning model. Over the past 2 years, Nvidia's shares have experienced phenomenal growth as the company's sales and earnings have increased dramatically due to the surge in demand for its pricey graphics cards, which are used to train and implement AI models. Thus, DeepSeek's assertion that it can accomplish more with less has sparked new worries about the future demand for Nvidia's CPUs. But this isn't the only thing that has recently been hurting Nvidia's shares. Another problem that DeepSeek's discovery has made worse is the relative delay in investing on AI infrastructure, as well as the possible limitation on Nvidia's chip exports to foreign countries. But selling Nvidia in a panic after this news might not be the best course of action. There are enough tailwinds, after all, to indicate that it could be able to find its magic again and even reach the $200 threshold. Spending on AI infrastructure is expected to reach enormous levels by 2025. Recent statements from the key players in this field appear to have allayed worries about a halt in expenditure on AI infrastructure. First, in an effort to construct more AI data centers, Microsoft declared that it would increase its capital expenditures, Capex, by 43% to $80 billion in the current fiscal year. Additionally, Meta Platforms has declared that it will raise its 2025 capital expenditures by around half compared to the projected amount last year. A significant development at the White House has coincided with the announcements made by these digital companies. As part of the Stargate project, SoftBank, OpenAI, Oracle, and MGX, an AI investment business based in Abu Dhabi, have declared that they will start allocating $100 billion right away to the construction of AI infrastructure in the United States. Naturally, you might be asking if Nvidia customers will spend less on its chips as a result of DeepSeek's model being so inexpensive to train. Although it's too soon to draw any firm conclusions, it's possible that Nvidia's data center graphics cards will continue to be in high demand. This is because DeepSeek's effectiveness may inspire more businesses to create affordable AI models, which would ensure that demand for computing power stays strong. Therefore, it's possible that U.S. tech giants' expenditure on AI would increase once more in 2025. This would enable Nvidia to maintain the remarkable rise in revenue and earnings that the business has been achieving over the last 2 years. Nvidia's continued dominance in the data center graphics processing unit (GPU) industry is a major factor in why it is most likely to benefit from the 2025 AI investment. According to different estimates, the corporation has between 70% and 95% of the AI data center GPU market, albeit it's likely closer to the higher end of that spectrum. This is due to the fact that competitors like AMD and Intel have hardly made an impression on the AI chip industry. Nvidia's closest rival in the AI data center GPU market is AMD, whose projected sales income in 2024 represents a small portion of Nvidia's potential earnings in this industry. The situation at Intel is considerably worse, as the company is predicted to miss its 2024 sales goal of $500 million for AI chips. Thus, Nvidia is poised to secure the majority of this year's additional investment in AI chips. Better yet, Nvidia's foundry partner Taiwan Semiconductor Manufacturing has doubled its capacity for sophisticated chip packaging, which should ideally enable the former to meet the enormous demand from the tech titans. Because of this, there's a reasonable probability that Nvidia's earnings growth in fiscal 2026, which starts soon and spans 11 months of 2025, will exceed analyst expectations. This could be the cause of this semiconductor stock's potential $200 price increase this year. For Nvidia's stock to reach $200, it must rise 55% from its present levels. According to consensus projections, Nvidia's earnings are expected to climb by 50% to $445 per share in fiscal 2026. According to the Street High projection, its bottom line will increase by 101%. However, Nvidia can surpass the average earnings growth prediction for the upcoming fiscal year because to TSMC's capacity increases and additional spending on AI infrastructure. In fiscal 2026, Nvidia might report earnings of $5.16 per share if its bottom line increases by 75%. It would be sufficient to assist Nvidia's stock reach $200 if the company's 5-year average forward earnings multiple, 40, were applied to the anticipated fiscal year earnings. Furthermore, the stock's trailing earnings multiple is higher than the projected earnings multiple of 40 that was previously assumed. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I know your funds are a big holder of Nvidia, one of your top holdings, at least in a couple of those funds. When you look at a sell-off like this, one that seems to have come out of nowhere, basically we get this, I guess, analyst report, if you will, about DeepSeek, but you go back on the Bloomberg terminal, we've been writing about this for a while.
Absolutely.
Does this worry you?
Well, I think there's so many headlines out there. There's so much news flow. So let's take a quick step back and think about what's happened over the last month, because this news that's really getting all the headlines today and got all the headlines over the weekend with DeepSeek really started, well, I guess a year ago when they released their model called V2, which introduced a lot of these potential breakthroughs. Those breakthroughs came to fruition in a model they released a month ago. So a lot of this has been out there. Last week, they released their latest reasoning model. That coincided with the inauguration. There's been a lot of headlines since then. So what my take on DeepSeek is in particular is I think a lot of the advancements that they've made are very real, and it's something to pay very close attention to if you're an NVIDIA shareholder.
I want to read to you a statement that NVIDIA emailed to our reporters, Ian King here at Bloomberg, basically saying that it is an excellent AI advancement, and they say the work illustrates how new models can be created, but they kind of dismiss some of these concerns as somehow this is a negative for NVIDIA itself.
Well, I mean, I think there's clear negatives for NVIDIA. There's also potential longer-term positives, I'd say, too. So on the negative side, what's clear is DeepSeek has created a way to, I'd say, do more with less. What they've done, the way I think about it in simple terms, is take a professional certification exam, like I took the CFA exam. There's a lot of ways to study for that exam. One way is you read all 5,000 pages of the textbook. On the other extreme, you just do practice questions.
Yeah.
What DeepSeek did is when they trained this reasoning model, they kind of took the practice question approach. They took some shortcuts, but created something that's definitely good enough and capable enough that was done very cheaply.
I love that analogy. By the way, I did the practice route too, and I failed level 2 twice. And then eventually I just read the book and I passed.
was like, but then you passed, so
Yes.
it's okay.
Right.
And it was interesting to see also NVIDIA talk about how the DeepSeek was export control compliant. It was like, please don't restrict us anymore when it comes to exports. Do you buy the dip?
So again, I think with NVIDIA, the best way to trade this stock, or you don't trade this stock, you own it for the long term. And I think 2 points I'd make on sort of the positive side for NVIDIA, what could this do for the industry more broadly? If the cost of AI inferencing, the cost of AI training comes down, it could make the applications more broad-based. It could unlock new pools of demand, new potential customers. So this could be good for innovation in the AI space broadly, which would be good for NVIDIA in the long term. The other point I'd make is, I think this is good for big tech as well. Separate from NVIDIA, I think lower cost of inferencing, very good for a company like Meta, very good for a company like Google, very good for a company like Amazon, companies that have AI embedded in their P&Ls. And then back to NVIDIA, the other point I want to make is this happens from time to time in tech investing. Big tech stocks get left for dead and they come back. This happened with Microsoft many years ago. This happened with Apple after Steve Jobs passed away. This has happened many times with Meta, many times with Google. Amazon was never going to turn a profit. Netflix was never going to turn a profit. These existential questions tend to come up from time to time. That's what's happening today with NVIDIA. I think, there are plenty of near-term questions that these companies are going to have to address during earnings this week, but I still am a holder of NVIDIA long-term. Buy the dip is not really how I generally trade NVIDIA, but I'm still owning NVIDIA for the long term.
You are most likely laughing uncontrollably if you have kept your Nvidia stock for the past 3 years. Early in 2022, a $10,000 wager would be worth about $55,000 today, representing a remarkable 450% return. However, prior achievement does not ensure future outcomes. Furthermore, there may be a substantial shift in the dynamics that allowed Nvidia to attain such outstanding performance. The elephant in the room is the recently released DeepSeek large language model, LLM, in Chinese. In sharp contrast to the tactics employed by its American competitors, including OpenAI, Alphabet, and Meta platforms, it allegedly proved that sophisticated AI models could be created without exorbitant expenses. Let's examine the possible developments of this tale throughout the ensuing 3 years and beyond. Goldman Sachs released a study in June 2024 called Gen AI, Too Much Spend, Too Little Benefit. According to the report, the $1 trillion in capital expenditures that tech companies are anticipated to make on generative AI hardware and research are unlikely to be profitable due to the inherent limitations of the technology. It made the case that LLMs might not be the best at handling challenging issues that warrant their development expenditures, because it concentrates on the pick-and-shovel aspect of the opportunity, producing the graphics processing units, GPUs, that cloud computing businesses use to develop their AI computing capacity, which is subsequently rented to consumer-facing startups. This challenge is remote for Nvidia. However, given that these startups are failing or wasting money, OpenAI lost $5 billion in 2024. It might not be long until chip demand begins to decline. DeepSeek made the issue too clear to ignore, but AI bulls were happy to overlook the warning indications of unsustainable industry spending. The company's open-source generative AI chatbot, which debuted in January, swiftly surpassed its American competitor ChatGPT to become the most downloaded free software in the United States on Apple's software store. More significantly, the developers of DeepSeek's R1 model claim that even though it was created for $6 million using less sophisticated Nvidia H800 CPUs, it performs similarly to ChatGPT's O1. OpenAI asserts, in a process known as distillation, DeepSeek may have trained R1 using its own proprietary models, and David Sachs, the White House's AI and crypto czar, thinks it's plausible that intellectual property was stolen in the process. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Though, if we get into a world where we can reduce the cost and you don't actually, you can't charge us a lot for AI services, like the everyday consumer, who is that bad for?
Well, I think, so I'd say, first of all, it's probably bad near term on the training side. I do think it's seeming to be not as important to invest massive amounts of dollars in training to get the best output. I think DeepSeek is showing us that there's ways to optimize your AI spending in a way that hasn't been done yet. So I think it's probably bad for them. For someone like OpenAI and some of the model companies, so Google Gemini would be another one there, I think this is showing that those models commoditize pretty quickly. I think it could be bad for these model companies. We'll see. Again, it's very early. This is evolving very quickly. That's where I'd start as kind of the losers. Then the derivatives for some of that stuff. So some of the industrials, some of the power companies, we'll see how this unfolds. I think near term, probably fewer massive training data centers constructed, but long term, could there be more inferencing data centers constructed? Could there be more AI run at the edge? Could there be more AI infrastructure built in that way? We'll see.
I am curious as to, you mentioned some of the earnings we're going to get. We're going to start to hear from some of the hyperscalers and some of basically the buyers, the ones that have been investing a lot of money in this. Do you think we're going to hear any sort of material change in the amount of money that they've committed to these projects?
Well, Romain, that's one of the really interesting things about the last week. So this R1 model from DeepSeek was launched on Monday. Mm-hmm. And then the next day you had this Stargate announcement with Oracle and OpenAI, and we can debate how real that is, but a $500 billion AI investment program. And then on Friday, Meta pre-announced unexpectedly their 2025 Capex plans, $60 to $65 billion, about $10 to $15 billion above the street. So clearly Meta is going all in on this. And I think their Llama models are the closest DeepSeek comp, by the way, a set of open source models like DeepSeek. So to answer your question, will these companies backtrack on the CapEx plans? I don't think so near term. I think the question is more next year, 2027, is the investment cycle finally starting to crest? We'll see there.
We only have time for one quick question, but I do want to ask you about the market reaction to Meta, because when you see all of these other stocks getting decimated, Meta spent most of the session in the green. I think it's now just dipping into the red, but you're not seeing these double-digit percentage losses there.
Yep.
Why do you think investors were maybe a little bit warm on Meta as opposed to some of the other software companies out there?
I think near term, people trading Meta stock, the big unknown ahead of earnings this week, there's two unknowns. What are the Capex plans? What are the OpEx plans? Capex plans, those were announced, so that was kind of a potential negative event that they got out of the way on Friday. So that's why that stock reacted okay on Friday. And then today, I think Meta is just a really interestingly positioned company. You've got, first of all, as I mentioned, cost of inferencing going down. That's a direct positive in their P&L, for sure. And then secondly, DeepSeek, open source model company. That's what Meta's made a big bet on open source models. That's what they have with Llama. So I think there's excitement about that asset moving forward as well.
And you are a holder of Meta.
We are a big holder of Meta.
A new startup in the field of artificial intelligence, AI, has caused a stir in the financial community in recent days. After developing a model similar to ChatGPT, the Chinese startup DeepSeek caused a stir globally. DeepSeek claims to have trained its model on earlier, less advanced Nvidia chipware, which is the main source of the investor concern. Investors are baffled by these assertions and wonder if Nvidia's more recent design is worth the high cost. Consequently, Nvidia's stock has been in a days-long decline. Is this a good time to buy, or is Nvidia's stock about to drop significantly? I'll examine some intriguing patterns in Nvidia's stock below and argue for the possible future course of the company's shares. Multiple sell-offs in Nvidia's stock in the days after DeepSeek's launch are depicted in the graph below. Declines of this size should speak for themselves, but there's actually something fascinating happening in the background. The worth of the company changes along with the stock price. Nvidia's market value has dropped by up to $600 billion as a result of the company's collapsing share price. At first glance, this appears to be terrible, but there's more to it than meets the eye, as is frequently the case with investments motivated by strong feelings. Nvidia's value multiples have decreased in tandem with the company's market capitalization. Nvidia's forward price to earnings, PE multiple, is 30.1 as of this writing, January 29. I'll go into the significance of this valuation multiple reduction and what history indicates might occur next below. I've compiled Nvidia's forward PE for the previous year as of quarter end in the table below. Last January was the last time Nvidia's forward PE was in the 30 range. This is significant because Nvidia's market capitalization was $1.5 trillion in January 2024, which is roughly half of what it is now. As was the case in 2024, you could be tempted to believe that Nvidia's stock will rocket higher given the parity between the company's future PE now and a year ago. History indicates that such processes are possible, but this time there is a crucial nuance to take into account. It is implied that Wall Street analysts anticipate Nvidia's earnings to double because the company's current forward PE multiple is unchanged from a year ago, even if its market value doubled. From a different angle, Nvidia's forward PE would have increased if the company's market capitalization had doubled, but its earnings hadn't increased significantly. Valuation expansion is the term for this idea. However, as I mentioned in the introduction, the DeepSeek plot is raising concerns about the future patterns in demand for AI infrastructure, particularly for graphics processing units, GPU, which are Nvidia's mainstay. To be honest, I wouldn't be shocked if some experts started to lower their estimates for Nvidia's revenue and earnings. Although this does not imply that Nvidia is overpriced, I believe investors should give industry professionals time to process the DeepSeek news and adjust their models appropriately. To put it another way, the fact that Nvidia's forward PE ratio is currently almost the same as it was a while ago may be considered a bit of a coincidence, as earnings estimates are almost likely going to change. This raises concerns about the forward PE ratio's current relevance. However, on a larger scale, I'm sure Nvidia will continue to dominate the AI race because its GPUs should continue to be crucial to the advancement of the technology. How much exactly? That is the crucial question. Therefore, even though history indicates that Nvidia's value might increase this year, I would reconsider that. I do believe that there is still a lot of value to be gained from purchasing Nvidia stock in the long run. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.